this one would be the information that we're going to use for the vertical analysis and the horizontal analysis. So you have just snack house income statements. The first column is for 2014, and then the second column would be the income statement for 2013. So you have net sales less cost of goods sold. You're going to have the gross profit, and then gross profit less other expenses. You're going to have your operating income, and then operating income less interest expense would give you your net income. And then for the balance sheet, we have the same for 2014 and also for 2013. First column is for 2014, second column is for 2013. For the assets, we have cash, accounts receivable, receivables. Net, when you say net, that is accounts receivable less allowance for bad debts. You have inventories and then prepaid rent, so you have your total current assets in here. And then for non-current, you have equipment and fixtures less accumulated depreciation, and that gives you your total fixed assets. Total current plus total fixed assets or non-current assets, you will have your total assets on this row. And then accounts payable, notes payable, and accruals for your current liabilities. And then you have only one item for long-term debt. And then you have your owner's capital. So total current liabilities plus long-term debt plus owner's capital will give you the total liabilities and capital. Remember that the total assets and the total liabilities and capital should be equal. Now, to start with your vertical analysis, in the description in the lecture, it said that vertical analysis is the process of comparing amounts in the financial statements within the same accounting period, so within the same year. This one should be 14. 20. How can I change this? 2014. 2014. Okay. And let's save it. So you have to compute for a common size income statement, divide each of the income statement accounts by net sales. So you have your net sales. It's for 2014 and then 2013. And then you will divide each income statement accounts by this amount. So let's start with 2014. That means net sales is 100%. Okay? And then, let's move this. So you have, for the cost of goods sold, in your calculator, you have 6,228,552 divided by 7,457,736, and that will give you actually 0.8351. We're gonna have 2 digits, so it's gonna be 84%, like this. And then for gross profit, 1,229,184 divided by your net sales, 7,457,736, and then you will have 0.1648. So that's going to be 16%. Next, you'll do the same. It's 886,177 divided by the net sales, 7,457,736. You will have 0.1188. So that's going to be 12%. And then operating income, 343,008 divided by your net sales, 7,457,736. It's 0.045. So that's going to be 5%. Oops, sorry. 5%, excuse me. For interest expense, 74,208 divided by the net sales, 7,457,736. And then it's 0.0099. So it's equivalent to 1%. And finally, you have your net income. It's 268,799 divided by the net sales, 7,457,736. It's 0.036 or 4%. It's like this. For the 2013, I would be giving this to you as your practice test. Okay, so you'll be the one to compute for 2013. You're going to be dividing all these items by the net sales. And Now, using this common size financial statements of Jazz Snack House, it is easier to compare items from within the same accounting period. So, for example, in here in 2014, the cost of goods sold as a component of net sales is here 84%. So, this means that for every peso sale, the cost component is 0.84 centavos because it's 84%. Although 84% is still big, this after you compute for 2013, you will see that there's a decrease from the percentage of the 2013 cost of goods sold to the 2014 cost of goods sold. So you'll have to compute first for 2013. And then the improvement in gross profit, once you have computed for gross profit, you would see that this 16% is higher than the percentage for the 2013 gross profit. And we can attribute that change in, that improvement in gross profit to the change in cost of goods sold percentage, but not just in the change of sales pricing policy because um, anyway, you have to compute this first, so you'll see the difference, okay? The cost of goods sold decreased, so the gross profit increased. Now we're going to do the vertical analysis for the balance sheet of Jack's Snack House. I'm going to compute for 2014 and then you can compute for 2013 as your practice test. So remember in the lecture it said that to compute for a common size balance sheet, you have to divide each of the balance sheet accounts by the total assets. So your total assets will be the 100% value. So 100%, and then every item will be divided by this amount. So we'll start with cash. That's 91626 divided by your total assets, 3921953. It gives you 0.023. So that's probably, we could do like one decimal place. So let's do 2.3%. For accounts receivable, that would be 939,460 divided by 3921953. That's 24%. 24. And then inventory. For inventories, that is 1,836,684 divided by 3921953. So you have 46.8%. 46.8%. And one more. Okay. Prepaid rent 180,000 divided by 3921953. Oopsie. 3921953. And it's 4.6%. 4.6%. Total current assets is 3,470,720 divided by total assets of 3,921,953, and it gives you 77.7%. Yeah. Okay, there you go. Now, equipment and fixtures, it's the same, 1,280,961 divided by 3921953. So you have 32.7%. And then accumulated depreciation, 406,728 divided by 3921953. You have 10.4%. And then 874,233 divided by 3921953, we have 22.3, sorry, percent. And let's move this. All right. For liabilities, it's going to be the same. It's 467,376 divided by 3921953. It's 11.9%. Next, we have 321,000 divided by 3921953. You have 8.2. It's 8.2%. Next item is your accruals. 436,560 divided by 3921953. You have 11.1%. And then you have 1,224,936 divided by 3921953. 31.2%. Next is, we're almost done, 608,000 divided by 3921953. You get 15.5%. And then two more. 2089, no, sorry, one more. 017 divided by 3921953. You get 53.3%. And of course, this one is equivalent to 100%. It's just the same amount as your total assets. Now, once you're done computing for the 2013, you would see that there is an increase in the percentage of current assets, and you would see that there's a decrease in the percentage of current liabilities. And this indicates an improvement in the management of working capital. There's also a significant change in the capital structure. You would see that from a certain percentage, which you will compute later, it increased, the owner's capital increased to 53.3%. So there would be further ratio analysis that should be done to check whether this change in capital structure is good or bad. Okay? But again, you have to compute first for the 2013 to see those changes. For the horizontal analysis, I will be computing only two items, and then you can do the rest for your practice test, okay? So what you have to do in here, remember, for horizontal analysis or trend analysis, it involves comparing amounts in financial statements of 2 or more consecutive periods. In this illustrative example, we're going to compare 2014 and 2013 income statements and balance sheets. So first, you have to compute for the change in amount. And then after that, you have to compute for the percentage of change. Okay? Oopsie. There you go. Alright, so how do you compute for the change in amount? This will be the same format of computation for the rest of the items for income statements and balance sheets. Okay? So all you have to do is to get the difference between the 2014 and 2013. So that's 7457,736 minus 6396040, and you're gonna get 1,061,696. So this is the change in amount. Now, I think I can move this a little. Okay. Dun, dun, dun. Yeah, like this. And then, how do you compute for the percentage? It's gonna be this change in amount divided by the original amount, which is the 2013 value. So divided by 6396040, and then you're gonna get 17%. So there's a 17% increase in net sales. Okay, what if, let's look at the interest expense. You have 74,208 minus 144,173, and that gives you negative 69,965. So in this case, the percentage of change would be negative 69,965 divided by 144,173. So the result is negative 49%. Okay, so the percentage of change is negative. So you just have to do the same for the rest of, hold on. Yeah, you just have to do the same for the rest of the items. Find the same amount and then get the percentage. Just remember that when you get the percentage, the denominator is the 2013. Okay, same goes for the balance sheet. You also need to get the change in amount and then percentage. Your denominator would be your denominator would be the 2013 value. Okay. If 2014 value is smaller, then definitely you're gonna have negative value for the change in amount and also negative percentage of change. You're going to compute for all the items.